The FBM KLCI remains in the red, dipping 0.08% today as investors remain jittery over the coronavirus outbreak. The local benchmark composite closed 1.17 points lower at 1,550.47. While it closed in negative territory, the broader market saw a recovery except for glove makers and healthcare stocks, which took a breather after yesterday's rally. There were more gainers than losers on Bursa Malaysia. Gainers included Malaysia Airports, Axiata Group and Genting Malaysia. Rakuten Trade Research Vice President Vincent Lau told The Edge that trading was quite mixed as investors reacted to recent announcements related to the epidemic. He says the slight dip in the KLCI is probably due to some bargain hunting and that while investors continue to be cautious, he believes the impact to the stock market will not be as severe as some may think. The death toll from the virus outbreak rose sharply to 132 with nearly 1,500 new cases, and countries have continued to impose travel curbs and pull out nationals from Wuhan. Putrajaya said today it will negotiate with Beijing to evacuate 78 Malaysians currently stranded in Wuhan and the Hubei province. As unfortunate as the coronavirus outbreak seems, Kenanga Research says the episode presents a buying opportunity for investors insufficiently positioned in equities. Reminiscent of the SARS impact of 2003, it says global markets have started to sell off on rising anxiety, and volatility is only set to heighten with the number of confirmed cases expected to jump in coming days. Specific to Malaysia, it says Visit Malaysia Year 2020 will be the hardest hit, likely throughout the first half of the year. But if the lesson of the SARS epidemic is to be learnt, Kenanga says it is that this crisis too will come to pass. It points out that during the 2003 outbreak, China's stock markets bottomed as the number of new cases peaked, around 2 months after the news initially made global headlines in a big way. Using the scale of the SARS correction as a guide, the research house says a potential drop of over 8% for the domestic market could see the FBM KLCI bottoming at 1,481, which it says certainly makes a compelling entry point. It expects a V-shaped rebound in tourism and retail-related stocks, especially Genting, target price RM7, Malaysia Airports, target price RM9.90, Padini, target price RM4, Kuala Lumpur Kepong, target price RM32.90, Genting Malaysia, target price RM3.30, and Syarikat Takaful Malaysia Keluarga, target price RM6.85. It has a year-end target of 1,712 points for the FBM KLCI. Former M-Bank Islamic Relationship Manager Joanna Yu Ping has applied to strike out Datuk Sri Najib Razak's suit against her. The ex-PM is suing her for allegedly mismanaging his accounts, which were used to divert funds from SRC International. Yu's lawyers contend that the suit is an abuse of process and was filed merely to bolster Najib's defence in his SRC case, where he is currently standing trial for corruption charges. Yu also filed a certificate of urgency with her application, as her defence is to be heard this Friday. The next round of case management has been set on February 4th, where the court will set a date to hear the application. Najib's solicitors filed the suit last December regarding his accounts, which he claimed were managed by M-Bank without his knowledge. Among others, the statement of claim accused M-Banker Yu of breaching their duties and disclosing information to Low Teck Joe, whom the suit referred to as an unauthorized third party. It also accused the bank of failing to notify Najib, despite the accounts being overdrawn by millions of ringgit for over 30 times. AirAsia X flew 1.61 million people, or 8% more passengers in the fourth quarter of FY19 compared with the previous year. The carrier's seat capacity rose 4% to 1.99 million, while available seats per kilometre or ASK capacity inched up by 1% to 9.21 million on the back of shorter stage length following its network realignment exercise. AirAsia X Malaysia recorded a passenger load factor or PLF of 81%, an increase of 3 percentage points year-on-year. It had increased flight frequencies to 6 destinations during the quarter under review to cater for high demand from the year-end peak travel season, and also launched 2 new routes in November 2019. For the full year, AirAsia ex-Malaysia saw the number of passengers it transported drop by 2% to 6.07 million, which was in line with a 2% drop in seat capacity and 3% drop in ASK capacity. The group explains that this came on the back of the network optimization exercise and subsequent route realignment. As for AirAsia ex-Thailand, passenger numbers swelled by 40% to 744,414, as ASK grew 43% to 4.08 million on the back of new routes and an expanded fleet size during the year. However, PLF softened by 1 percentage point to 83% on account of the aggressive fleet and network expansion. It carried a total of 2.60 million passengers in 2019, up 29% from 2018. ASK capacity was up by 41% to 14.47 million, thanks to fleet expansion that led to new routes from Bangkok. The body shop retailer and distributor InNature has priced its IPO at 68 cents a piece, with an eye on raising 120.5 million ringgit from the exercise come February 20th. Post-listing, it will proceed with its expansion plans. InNature Managing Director Datin Mina Chiafong says the plan is to open 1 to 2 stores in Malaysia next year, 6 stores in Vietnam and 2 more stores in Cambodia. InNature also intends to further expand its Natura brand of products. It aims to open 2 stores this year, but they will serve more as showrooms as it looks to online distribution channels. Chiafong explains Natura will be sold mainly via social networks and customer-to-customer transactions by enabling individuals to participate as vendors and earn commission from every sale through an app.